Hello, today is Thursday. It is the 26th of May, 2011. The current time is close to 11:20 a.m. Eastern Time. We'll start off within the hourly chart. Market came up close towards this 50-day moving average and never quite got up to it, rather pierce below it, and it did manage to come back up towards this significant Fibonacci level. And as I was saying on the blog, I thought there was a decent chance without much of a correction of going up to this level, and that's happened. Now it's come back down towards a running average since here, as I was saying yesterday. Don't know if that's even going to mean too much now as far as that trend line, wherever it matched up is where I was going to draw it. So there we go. There's the trend line. Nothing too fancy about this. Support level, there we go. As far as the other trend line, I'm just a little curious right now. I mean, it wasn't resistance, so I don't know if it's going to be support either. Once again, something to keep your eyes on as far as the shorter term is concerned. One hit here, two hits here, and this doesn't have the first 20 minutes of this candle, and it went back there again. Currently roughly around here as of the recording of this video. Basically, I was saying yesterday, maybe we will find this resistance become future support. That's exactly what happened. If we break below this line, then the big level is this 5-day moving average. The likelihood of there being a bounce from this level is greater than 50%. And maybe test it now, maybe you'll do it later, not too sure. But again, when there's a rising 5-day moving average, especially if it's the first, second, or third hit, you usually expect that there's going to be some sort of level of support. This means that the intermediate term market is bullish right now. It's going to stay bullish until this baby here flattens out and goes lower. As far as the volatility, it's rising just a little bit. Still nothing like I was seeing back in here, but a little bit bigger. And that occurs usually when the market is selling off. That's very, very normal to have higher volatility on the selling of markets. Now, as far as the time is concerned, the blue line represents 2 days or 46 hours. That's because I don't have an hour for the 5 to 6 p.m. time frame, as there's no trading for the majority of that time frame. From 4 o'clock to 5:15, I count as 1 hour. Daily chart. That's pretty much a battle in this little range here. The range is from about 33 to 39. 39 represents the area of the 50-day moving average, previous resistance, and a huge slew of Fibonacci levels that I talked about pretty much on the way down. And this level here is where this Fibonacci support is. It's the level where it found support, and this 100-day moving average not shown on the screen as well as this blue line, but I'm sure the 100-day moving average is probably up here somewhere, regardless of the fact. What's important, I think, is that it makes a higher low as long as it can stay above this previous resistance field. And again, the 5, that means if you come back up to the 39 level, the chances are greater that we take it out. But on the contrary, breaking below here and coming back down to this Fibonacci level increases the chances of taking it out, and thus setting a test of both this 25, 26 Fibonacci level as well as this 200-day moving average. Some people say, well, the fundamentals for the market say that it can't happen. Well, fundamentals says that it can happen because of who controls the paper market. And if the big powers want to buy in at cheaper prices and they're going to do this, then that's what will happen. I don't know for sure exactly what's going to happen in the long-term time frame. The currency has no chance of surviving, and silver's tangible value of its intrinsic level is here to stay. All right, same chart, just 50 candles on this one. I've got this set as cautiously bearish. Why is that? It's because it still hasn't gotten above this 18 period average, which is declining. It's also hasn't gotten above the significant Fibonacci level. This is a second test of this Fib level. The first one was in here. Again, if you find some support back here and then come back towards this level, the odds are that you would take it out. And if that happens, the 18 period average of highs, lows, and closes would flatten out. Thus, it would make the market neutral. But If obviously it finds resistance, comes back lower, the chances of taking these levels out, as I just mentioned, would thus increase. Now, the volatility for the daily chart is showing, like I say, the breakout sides big, and this is a huge rise within the volatility. What I notice here, when you're below the higher average, in this case it's a 20 and 100, find resistance, go back lower. Find resistance. Here it got above it, didn't stay above it. Here, same thing. Pretty much even the same here, except it went quite a bit above it. And it's been finding support more than anything, and boom, now it's lifted off a lot higher. This, more than anything, tells me that something's going on. It's the start of something. And the start was, of course, the big moves that started the move from 50 down to 32 at the start of this month. I'm guessing the something is the next level towards the currency collapse. That's my best guess, and it's only that of a guess, although partially educated, or mostly educated. Final chart is the weekly chart, and I mean, this market still remains bullish, and if we've come back, find support, maybe we come down on this trend line. Either way, the bottom line is, if we look at the pattern of higher highs and higher lows, this there's the low, high, higher low, higher high, higher low, higher high, higher low. Really the same level as high as this, but it did make a higher low. Higher high, higher low, higher high, and this is looking like a higher low. In order for this to be a higher low, it really has to stay above this level here, and if it makes a lower high, then this could be a little bit of a warning sign. However, like I state, it seems as if something's going on for the end of this currency. I think it's this year, but then again, it's only an I think situation, and it's more towards the physical, tangible silver, because of the obvious. People are waking up to how currency is created, as long as the effects of a debt-based system that, quite frankly, it guarantees huge levels of debts. That's why I like the silver market. Take care, and the next video update will most likely be over the weekend. I don't think I'll put one out Friday. The blog should be updated Friday afternoon, Friday evening, and have yourself a great day. Bye bye.